first just kind of tell us a little bit more about invoice financing and how this all works.
Sure. So Velotrade is creating an online marketplace that allows corporates to obtain working capital by discounting the trade receivables to institutional investors who are willing to advance funds and take exposure to this new asset class, which demonstrates local relation to traditional asset classes such as equity, fixed income, and real estate. So on one hand, we serve corporates of different sizes. We've got, for example, a number of Fortune 500 companies, large European and North American retailers, automotive manufacturers, and electronics component companies.
So just show us, Gianluca,
yes,
how it works. We've got a little chart showing the flow, effectively.
Right. So let's say we got a seller. For the sake of this, let's call it Hong Kong companies that sells to a large European buyer. The payment terms is going to be 90 to 120 days. So this means that the buyer will only make the payment after 90 days. But the seller would need the money now to pay rents and salaries and working capital expenditure. So the auction that the seller would like to create on Velotrade is on a trade receivable, which sits on the asset or the balance sheet. So the seller comes to Velotrade. They discount the trade receivable. Velotrade assesses a number of different variables. For example, the existing relationship between the seller and the buyer assesses the creditworthiness of the buyer. So then we are able to put it into the platform. Once the platform, the transaction is put into the platform, then investors in Velotrade platform advance up to 80% of the invoice value.
How is this different from buying and selling bad debt?
Well, this is not a bad debt. So this is an invoice that is not due to payment yet. So it's still an asset on the balance sheet, and basically the seller sells the asset to Velotrade for a purchase price. Again, once the asset is due for payment, the debtor will pay Velotrade 100% of the invoice value.
So if you got 80% up front, you get the rest of the 20%.
Minus fees.
Where you get and that's the thing. That's how do you make money from this?
That's correct. That's correct. So we assess a number of variables to take into account these transactions because for us the most important thing is the existing relationship between the buyer and the seller. And unlike traditional lenders, for example, banks, that they look at the creditworthiness of the seller only, we look at the existing relationship between the seller and the debtor. So we are able to detect anything that goes bad as soon as the first invoice is due for payment. On average, what we're seeing in our platform is an invoice lasts for 60 days.
Does it still last for 60 days as we see an economic slowdown taking place? We have a trade war and uncertainty. Are you seeing those invoice periods taking longer to be fulfilled? Or what's the deal? Are you seeing more defaults? What's going on?
Well, in our platform, we take into account a number of variables, and we are able to use technology to leverage on technology to assess transactions that traditional lenders would be unable, unwilling to take on board. And this does not necessarily mean that the transaction is a bad transaction. Is that because of traditional way of assessing the risk? For a traditional lender, then they wouldn't be able to take on these transactions. With regards to extended payment terms, yes, in terms of a slowdown of the economies, we could see extended payment terms.
So, Mike, what I'm trying to get to is, are things materially getting worse at the moment?
Well, not really. In Velotrade platform, for example, we had zero default rate so far. So we put a lot of emphasis in assessing the risk.
You're operating in Hong Kong right now. I know you just got your SFC license as well. But given some of the refinancing needs that we see in countries like China, like India, do you have plans to enter markets there?
Well, we have our existing offices in Vietnam, Taipei, and Shenzhen. We are aiming to expand operations to other Asian offices for sure. What I would like to emphasize here is that unlike many traditional fintech companies, Velotrade takes a different stance because we look at who the big buyers is, and we assess the relationship. So by doing this, we are able to minimize our default risk for the investor.